Rajat Rajgadia, Director Research with Motilal Oswal Securities, joins us live from his Mumbai office. Rajat, good to have you back on ET Now. Thank you for joining us. Rajat, if fears of monetary tightening really squeezed emerging markets out, do you think now it's clear blue skies once again?
Hi, good morning. Well, I think at least some of the dark clouds have started becoming light. We are still not in a period of clear blue sky because the message is very clear that Fed is surely going to be into a mood to start doing some scaling back, but they are just trying to manage the expectations well. And you get a very divided opinion when you see various comments coming from the different voices from US. Last evening's voice was a little contrast to what we have been hearing from the Fed chief. And the markets will remain volatile because people nowadays react all of a sudden on every event or every such comment. We reacted very adversely when 2-3 weeks back the first comment came, and again today we are reacting very widely on the up move when we are seeing. So I think this is more a signal of volatility and less a signal of which side the direction is going to be.
Rajat, stay with us. Lots more to chat about with you, but for now we're going to take a very small break. When we come back, we'll also get your stock ideas from Mitesh Thakkar. Back with trading calls right here on ET Now. Brace yourselves for a gap up start. At least that is what the SGX Nifty is indicating with the tick at that 5,900 level this morning. But let's quickly bring in Mitesh Thakkar and chat about his trading ideas as well. Mitesh, what is it that you've identified for our viewers?
Well, I've got all buy calls, given the fact that in line with SGX, I do expect that the Nifty will possibly give a breakout from this trading range and open up an upside of about 80 to 100 points, even after the gap up opening. So I've got a buy on Divi's Lab with a stop at 989 for targets of 1045. Renuka was a recommendation yesterday as well, can be bought with a stop below 17.5 for targets of around 19.25. Tech Mahindra is a buy with a stop at 1064 for targets of 1110. A BHEL is a buy with a stop below 180 for targets of around 195. And Biocon is a buy with a stop at 285 for targets of 308.
Mitesh, thank you for those trading ideas. Rajat, once today's gap up adjustment is behind us, I guess markets would entirely focus on two things, rupee and earnings. So let's focus on earnings. Do you expect that this time around Q1 numbers will be rather noisy given what has happened to the rupee and how bond yields have moved for the quarter gone by?
Well, I think the impact of the rupee will be felt relatively less in this quarter, because if you look at the average rupee for the quarter, it was still at about 56. So at least for all the companies who either would be earning or importing, they will still be reporting the numbers more from a 56 point of view. The impact where the rupee will be made is whichever companies do the little bit of accounting of mark to market on their debt into the P&L account, and there are only handful of such names. Most of the companies route it through balance sheet. And secondly are the companies where the forex hedges would be doing. I think if rupee remains at 59.60, the bigger impact of these numbers will come into the September quarter, where all the export companies should at least start realizing that kind of a rate. And second, on the bond yields, I think if you look at the bond yields, while they have been very volatile during the quarter, they had fallen off a lot from the March end till May end. And in June, they have recovered maybe two-thirds of those gains, but they still stand below where they were at the beginning of this quarter.
Rajat, what's the expectation from Infosys this time? Because the stock has been going in pretty strong into its earnings.
Well, I think the number expectations from Infosys is really not anything great. We are looking at about 1.5% kind of a dollar revenue growth on a QOQ basis. But I think the focus is on Infosys is shifting on three counts. First, of course, till the time currency remains so weak, you are unlikely to see the stock going down even when there is a selling in the market. Second, do they make any changes to their full year growth guidance, which earlier was a band of which was like 5 to 10%. And secondly and thirdly is what kind of comments Mr. Murthy makes after the results, because this has been an event that investors have been excited about, and they would like to hear more from him on what kind of changes or outlook he in particular is seeing from the company point of view. So I think the bias is positive from the stock, but the numbers are something which over the last few quarters we have gone wrong big time on both sides.
So let me construct a scenario. If tomorrow Infosys, if they decide to slash their full year revenue guidance from 6 to 9, and if they make 6 to 9, 5 to 9, will that disappoint the street? Will the stock crack, or markets tomorrow could give benefit of doubt to Infosys?
I think markets would give a benefit of doubt because they have anyways been in a period where numbers have remained below the industry average for a while, and some tinkering of guidance by 100 basis points here and there will not make a difference. What would matter more is what kind of qualitative statements you come to see. And interestingly, or more importantly, you should also note that despite the currency of 59 to 60, the stock is still at this range of 24,500. So it really hasn't done anything during this entire period of currency depreciation.
Okay, Rajat, let's look at some individual stocks, and I've been reading some of your wonderful reports. You got a buy call on Bata. That stock has done exceptionally well in last 10 days. Why do you like Bata, and what is your price target there?
Well, I think the key story for Bata is this whole consumption story, which has been gradually spreading from one segment to another. And we think that the kind of retail reach that they have been able to make, now they are introducing different strategies to target newer audiences and different price categories within the same audiences. So you will see volume growth returning back, profit growth to be quite good. And we have seen how companies with good balance sheets, good parent, sustained earnings have seen massive re-ratings in their multiples. You are still getting this stock at about 20 times up, 20 times forward. So I think while we have a price target which is a return of 20% plus, you should be invested in this name and then play this out throughout this consumption theme. I don't want to set a price targets where investors can sell it out, but I think be into the name right through the story till the time it continues to play out.
Rajat, any of the ADAG names that you are liking? Of course, there is fundamental news as well building up in most of these names, the likes of an Arcom or a Reliance Power. Anything that you would recommend right now?
Well, we have a positive recommendation on Reliance Infra and a neutral recommendation on Arcom, because a lot of the price move that we have seen around Arcom has been triggered by events which have in effect given confidence that the process of deleveraging is happening at the company level. From a very highly net debt to market cap, now the net debt to market cap is inching more closer to 1 time. So I think that is definitely positive from the company point of view. But within the telecom pack, our preferred bet right now is first Idea and second Bharti, as we have outlined in that similar report.
Bharat, So Rajat, I guess universally everyone is acknowledging that banks have hit some kind of a stumbling block. So what is your stand on this entire PSU versus private banking space?
We have very interesting debates going across all client, where the continued performance divergence between PSU banks and private banks, and I'm not saying from stock price point of view, I'm saying more from the operating performance point of view, is very, very surprising. Even yesterday when IndusInd Bank reported numbers, their NPLs were hardly anything, and the profit growth was a big 42% kind of a growth. On the other hand, this quarter we'll be seeing the PSU banks reporting a decline in the profits. The whole bedrock of Indian earnings growth story has been single-handedly held by the private banks, which even in this quarter will grow by 25% plus. My sense is that the diversified loan book of the private banks, where focus on retail and cherry picking onto the corporate segment, has helped them very well to tide through this difficult time. But going forward, as the loan growth opportunities moderate into the system, because that will be the consequence of the third year of 5% GDP growth or third year of very low GDP growth, I think you will start seeing some impact coming onto the growth potential of these private banks also, unless in the next 6 months you start seeing system reviving very well. So valuations for select private banks are rich. I think people are also valuing them in the same bracket as the bracket value consumer names, right? Because of which they are holding well. PSU banks, you need at least 1 quarter of reported numbers where you don't see any further pickup in NPLs. That quarter has been getting postponed from September to December to March to June. Even this quarter, we think that things will look bad as far as the stressed loans are concerned. So I think we will have to wait. We'll have to see currency getting stable, and valuations at all points of time have looked attractive, but the underlying environment is something which needs to be more conducive for them.
Okay, we're going to take a very quick break again on that note. When we come back, the pre-open rates, and we're also going to chat with Sanjeev Prasad from Kotak Institutional Equities, bring on board Tushar Mahajan from Nomura India, Bhavtoj Vajpayee, MD and Head of India Equities at Barclays as well, will join in on the show.